Hey there, welcome back to this Friday edition of FreightWaves. Now, I'm your co-host, Andrew Cox, and we've got the Detroit Bureau Chief, Alan Adler, coming up to give us a look at his Friday newsletter, Truck Talk. This is, of course, covering everything in the world of trucks, electric trucks, autonomous trucks, and all of the SPAC news that has been coming. Alan, how are you, sir?
Good morning. It's great to be here. Thanks, Andrew.
Good morning. Thanks for being here as well. So let's talk about it. Your title of this week's Truck Talk is Proxy Plumbing Edition. What do you mean by that?
Okay. Well, first of all, we love alliteration at Truck Talk. So if you get two P's together, that's a good thing. Proxy plumbing basically is spending time doing something that's kind of boring, really, except if you know what you're looking for. And that is going through the proxies, which come out around this time of year in advance of public company annual meetings. And in those proxies, they are detailing what the compensation was for the people who run the company. Thought it would be interesting this week to take a look, not so much at what kind of stock these guys are getting, because many of the SPAC companies, these special purpose acquisition companies, they own a big chunk of the company, the people who run it. So, and the interest in the stock isn't maybe as interesting as looking at how much they're actually getting in cash to run these companies. So we took a look at a few of the companies that have reported that have annual meetings scheduled and have sent out these proxy statements to their shareholders, just to get an idea of what kind of cash are these guys getting in addition to the holdings. The part of this that's truly interesting, though, is that after a fall where these companies could do no wrong in the market and they were darlings, their stocks went up and up and up. Now they've gone the other direction, and some of them are touching or actually at 52-week lows. So you're looking at a sort of a juxtaposition between the salaries they got for 2020 and what's happening in the market now.
Alan, I have a question for you. Thinking back on, is a characteristic of these SPACs, does it allow them to retain more equity than if they went a traditional IPO route? You say that a lot of these founders do own a significant chunk of the company, which is not always the case once a company has gone through 4 or 5 rounds of venture capital and then goes public. Maybe the owner only owns 8 or 10%. Is that not the case with SPACs? Can they retain more equity?
Well, they basically pledge all the equity that they had in their private company when it was a private entity into the public company. And usually some of these startups are heavily owned by, 1 or 2 or 3 individuals. Good example of one that did go through an IPO recently, of course, was Too Simple, the autonomous truck software company. And their 2 founders basically own in the neighborhood of 35% of the company. Trevor Milton was an outlier. He owned a really big portion. I think at one time it was 45%. But generally, it's in that 20% range right now. And it's usually a conversion of what they had when it was private.
Yes, I understand. They're actually going public faster than the companies that traditionally IPO, right? They're taking their private round or their public round when other companies typically take a private round. But what have you read through some of these salaries? What are the takeaways you see from some of these SPACs now that they're down, 30, 40, 50% off their highs? What are you reading through in these proxies?
Yeah, I think we have to sort of separate the stock price and what's happening in the market, because you can be a darling and then you can be a dog in a matter of months,
Right.
and that's what we've seen happen here. I think nothing really stands out from a salary perspective. I think some of the interesting things that we found out was sort of what the additional compensation might be for. Lionel Selwood, for example, at Romeo Battery, he's getting his rent paid in Los Angeles. Pretty expensive out there, about $36,000 a year for rent. The CEO at Canoe, which is another recently de-SPACed company, they're standing alone now. Got a lot of additional compensation for mortgage. So there's some of the interesting things in the cash side are what they get besides the salary.
And Alan, you also spoke to some automated manual transmissions in your Truck Talk today. Can you tell us what you wrote about there?
Yeah, it's interesting that this is a technology that has basically over the last few years it's swept the industry. I mean, you get to a certain point with a technology. In this case, it would be an automated or fully automated or automated manual transmission, and it's something that truly is full penetration now. I mean, 90+%. You just don't have that many truckers anymore that are shifting themselves, and the reasons are twofold, really. One is that the newer transmissions, these automated transmissions, are really good on fuel economy. And if you're looking at the TCO factors, this is what you want. You want to get a transmission that is going to give you that, potentially double-digit fuel economy. The other thing that's happening is we've got a lot of truckers who are aging out. They're getting ready to retire, or they are retiring. The average age is over 50 years old. And so, as the younger drivers, and of course, we're struggling to get those, but as the younger drivers are coming in, they don't know how to drive a manual. And so, they're trained on the automatics. And so, it's just been an interesting shift. It was kind of pointed up this week by Volvo, which was the first to bring the automated transmission. It's I-Shift technology here in 2007. Around 2012, Daimler got in full force, and of course we have Cummins and Allison and others that are all doing automated transmissions now. And the battle really is to see who can squeeze more efficiency out of them.
Well, I can't say that I know how to drive a manual car. I never learned either. I grew up driving an automatic car, as I'm sure most people my age did, and a lot of the new drivers that will be getting into the industry. I do want to talk, we got about a minute here, Alan, before I let you go, but talk to me about the HVIP program, the California Incentive Program to get trucks green and clean.
Yeah. Okay. So everybody that is paying attention to this one, in terms of getting some cost help or pricing help with their electric trucks, they're paying a lot of attention. June 8th is the date when the first half of the $165 million that California makes available for incentives on electric trucks comes available. That I should say that's buses too. That's about a 20% price break. So they'll be lining up to get that money.
Wow, 20%, that is a huge incentive. Alan, thank you so much for your time today. We'll be having seen you more of you next week.
Yep. Be back, and thank you very much for the opportunity.
Absolutely. Have a great weekend, Alan.